Hello, everyone. Greg Michlig here, President and CEO at CUInsight.com. And on this episode of Three Questions, it's a pleasure to welcome Stuart Bain and Mark Majeske, both Senior Vice Presidents with Alacriti. Stuart, Mark, thanks for being here.
Thanks for
Th-
having us.
Thank you.
Well, all right, I'm sure everyone is really eager to hear about the valuable insights you have to share. So, with that, let's get to those three questions. How are credit unions using request for payment or RFP and RFP-like solutions such as pay by text and CSR bill notifications to modernize loan payments and enhance the member experience? Stuart, let's start with you.
Request for pay in the basis of how TCH and FedNow describe it is still relatively speaking new. So we're really talking about request for pay, almost adjacent type solutions, which is essentially a two-step payment. So members at credit unions that use our service are probably already familiar with this concept with the two things you described, pay by text and CSR notifications. So the pay by text we describe as like a third payment type that sits between manually doing a one-time payment every month and signing up for recurring and fully automated payments. So what we do is use the concept of a standing authorization. So the member pre-approves a payment of a billed amount at a future date to be determined, and they're saying, I agree to pay this such that they don't have to go through the whole natural approval process to approve each transaction. We can then send them a text message that they can essentially respond to by just saying, pay it to approve that transaction. So they get the benefits of a really easy reminder-based payment experience and the easiness of just responding to it without being having to go somewhere and approve the transaction or being uncomfortable with the fact that we're going to keep taking money from the same payment method each month. Basically, they can opt out at that time and process the payment a different way. We also make use of this for an outbound notification from a CSR. So this basically allows a CSR to send an on-demand request for payment. So let's say they're working a queue of members who are delinquent and they can't get hold of them, or they ask them to call them back later, or they say, can you call my brother? He's going to make a payment for me. Basically, what they can do is send out this email or a text, which is a request for payment with a link that takes the member or the third party back to a website hosted by us where they can easily enter their payment method and approve the transaction. So this concept of the two-step process, setting something up and then having to go somewhere and approve it or reply to a text message is really going to be very familiar to people that start to receive a request for pay at their bank, Chase, Citibank, wherever.
I appreciate the kind of real world use cases that you provided there.
Mm.
And Mark, I'm wondering with services like Zelle, PayPal, Venmo already shaping member behavior, how can credit unions leverage RFP to meet rising expectations for both convenience and immediacy?
Yeah, I think one area, and I'm just going to cover three. These are things to think about, right? So RFP is a capability or a tool. It's not the actual product or use case. It's something you use to justify the means, right? And in addition to that, you would use it to create an innovative member experience. Member experience is key in RFP, right? It's making things easier for everyone. And use it only when it's a complement to what you're trying to achieve in designing a product. Also, use it where a lot of corporates who do use RFPs like it because it increases their communication to their customers. So keep that in mind if your member is a corporate or a company trying to increase the communication efforts between them and their customers. Also, another lessons learned, and I'm sharing these first. Don't create a solution looking for a problem. I would say reverse engineer it. Look at the problem you're trying to solve or the customer experience you're trying to enhance, and then build the product around it. Some examples of these have been real estate transactions, invoice delivery for a multitude of firms, auto purchases, transportation COD payments. That's the trucking industry. Had a great chance to speak with folks in that industry. They have challenges with getting COD payments and then delivering the goods. If you did that electronically with an RFP payment, makes it very easy because it's almost pre-approved, and then you can go deliver the goods without having to drive away with them still in your truck. And electric company shutoffs for non-payment of bills. Think about it this way. If you and I are on the phone and we are ready to shut off your power because of non-payment, we could do a workout arrangement on the phone. I could send you an RFP request while you're on the phone, and you could make a partial payment on that. I would know in seconds that you've done it and avoid the entire shut-off process. That's just one example of areas where things are changing, and I'm seeing a lot of activity around those use cases. In terms of challenges, there are basically two. One is the standardization of a receive-only user experience. That's something that's being worked on. I happen to be sitting on a number of work groups with RTP and FedNow trying to come up with a standardization for that process. And the other is think about this realistically. If you send me an invoice, it doesn't mean I'm going to pay it right away. So what happens then, right? And that's a big question that we get. I think the answer to that is being addressed in the new version of RTP 6.0, where they're starting to promote the ability to do recurring and pre-authorized transactions. So you can send me an invoice, I can then schedule it to be paid. I don't have to pay it right away. So that's just some examples.
Yeah, really interesting. And just the RTP elements of that as well. I know that's top of mind for many financial institutions, credit unions, of course, included within that. Looking ahead, how do you see RFP evolving as a part of a broader real-time payments strategy? For example, areas like account funding, recurring bills, collections. Stuart, let's go back to you on that one.
Sure. So, I mean, if you look at the statistics for request for pay as live now, a lot of the originators are brokerage firms. They're using it to fund their accounts in real time. And the reason for doing that is there's two main reasons. One is it's guaranteed good funds and it's irrevocable. So if you think about funding of new accounts from a credit union perspective, it's probably one of the riskiest transactions that a credit union can process. You may have somebody you've never interacted with before providing a brand new bank account to fund an account. And the instant funding is really necessary because if accounts are not funded promptly within that session or within a few days, they may never get funded. So you've gone to all the cost of opening up an account, doing all the underwriting, and then it never gets funded. Existing methods have two main issues. ACH is cheap, but the funds are not guaranteed and are not irrevocable. Somebody could open the account and then it could be an NSF or they could dispute it later on. You could use cards, but they're expensive, but you do get the good funds model. But again, you can suffer from disputed transactions or chargebacks. So you end up with all of these intrusive account ownership verification steps. And even then, if it's an ACH, you still have to put holds on funds, especially if it's a brand new account. Obviously, RFP then gives you that guaranteed good funds and it's irrevocable. So you can make the funds available immediately, which is a much better experience for a brand new member, or even for an existing member that wants to transfer some funds over to a certificate of deposit, for example. So that's one of the key use cases, mirroring what we're actually seeing RFP being used for out in the real world right now.
Mark, anything to add on that one?
Yeah, from an industry perspective, I think I look at it in a number of ways. I think one is that that RFP is maturing. When it was created, the intent was that banks and credit unions would innovate and create new use cases for it. And I think what's happened is through the past couple of years, we see the networks are improving the experience for RTP or RFP, sorry. So with the addition of new fields to support more data, because obviously that's a big benefit to create response mechanisms for invoices. So the industry or the networks themselves, and this is really RTP and FedNow, have done a pretty good job of keeping up and changing and enhancing. I think the other is that credit unions are looking for new ways to improve their member experience. So that's something that's new and evolving. And then more and more POCs I'm seeing, proof of concept on RFP applications. I happen to be working with a number of our customers on some POCs for that. So I think the combination of all of those three things happening at the same time, I think we're making a lot of progress on RFP.
You mentioned recurring payments on this question, Greg. I don't think we'll see many credit unions or even billers turn all of their recurring and auto pay payments over to request for pay, it would be a pretty bad member experience rather than having it automatically paid each month to have to go to the bank and approve each transaction. Now, we might see it as this type of model, which is the first transaction, if you sign up to automatically pay your mortgage, for example, is done as a request for pay because it lets you know that that member owns that account and you get good funding for that first transaction, but probably pivot to an ACH debit thereafter. Then perhaps if something goes south, you might switch back to using request for pay. So the account's gone delinquent or it's about to go into collections. And again, my take is that RFP is really ideally suited to those high risk transactions, the account funding I referred to earlier. So if you need to make sure you want to capture a payment on an auto loan because it's about to go into collections and repo, do it as a request for pay, if possible, because that way you're getting that, again, the good funds and the irrevocable nature. So you know that you're good to not go down the process of initiating the repossession process, and the value at risk, which is the value of the car, is not at risk anymore.
That's really good stuff. I really appreciate the explanation, and just want to say thank you to both of you. It's been a pleasure to connect with you, and I appreciate you taking the time to join me today.
Thank you for having
Great.
us.
Thank you, Greg.
Yep. And a final thank you to all who tuned in for this episode of Three Questions. We'll see you next time.